Do you want to add 3 great stocks to your portfolio so you can start receiving a dividend payout every month and do it by investing in respected companies that have been increasing their dividends for at least 37 years? Then you're in the right place. In this video, I'll show you how you can add 3 stocks to your portfolio, each representing a different sector in the market that will not only pay out a dividend each month, but also boast track records of solid returns as well. And before we dig in, give that subscribe button some love. And don't miss out on signing up for a newsletter as well below. You'll receive an email each week that offers personal finance tips, market updates, and my stock pick of the week. There's been a lot of talk as of late on investing in stocks, ETFs, or mutual funds that boast a great dividend yield. And I'm all for investing in assets that tout good dividend yields, but not solely on the fact that they have just a high dividend yield. I want investments that first have a great total return track record and also boost a nice dividend as well. It's the best of both worlds, a great stock with good returns and pays a nice dividend that you reinvest. Each of the stocks I'll go over in this video currently meet that requirement and either have an overall analyst rating of buy or strong buy. 2 of the 3 stocks are part of the Dividend Kings group, meaning they've been increasing their dividends for at least 50 years straight. And the 3rd stock is part of the Dividend Aristocrats group, meaning it has been increasing its dividends for at least the last 25 years. All right, no need to delay any further. Here are the 3 stocks that not only will give you a nice dividend yield and a dividend payout from one stock each month, but are also 3 incredibly strong companies with a great track record. First up on the list is PG, better known as Procter & Gamble. This household and personal products company has been a bellwether of a stock and has been increasing their dividends to shareholders for an incredible 68 years and is a member of the Dividend Kings list. Their current dividend yield comes in at 2.33%, and over the past year, the stock is almost up 16%. Fun fact, there's a massive P&G plant in my area that's so big, it's like its own little city when you drive by. It's enormous. Our next stock is also part of the Dividend Kings group, and that is SYY, which is the ticker symbol for Cisco. No, not Cisco or CSCO, the IT company, but Cisco, the food distribution company. They've been increasing their dividends for an astounding 55 years and come in with a current dividend yield of 2.5%, and the stock is up over 14% over the past year. Another fun fact, my parents owned a few restaurants when I was a kid. We received a lot of the food for those restaurants from, guess who? Cisco. That was back in the mid-'80s, so you know they've been around a long time. And our final stock on the list is CVX, or as most know it to be, Chevron, which is one of the behemoths of the energy sector. Chevron is part of the Dividend Aristocrats and has been increasing their dividend for 37 consecutive years. Chevron currently boasts the best dividend yield of the 3, coming in at 4.19%. And over the past year, Chevron is up over 6%. And no, I don't have any personally related fun facts about Chevron, although I have a general fun fact in that Chevron sells over 3 million barrels of oil per day. And I'd say that's just a little more than the 25 barrels a day they produced when they started the company back in the late 1800s. Now that we know the stocks that could be a great addition to your portfolio, let's take a look at how each of these stocks performed over the recent past to see what a $10,000 investment in each would be worth with their dividends reinvested. For P&G, a $10,000 investment would have increased to over $27,000 in 10 years. And you can see that it also did well at other points along the way when looking at this graph. For Cisco, a $10,000 investment would have increased to over $29,000 in 10 years. And even though it struggled over the past 3 years, it's the winner of these 3 over the last 10 years, as you can see in this graph. For Chevron, a $10,000 investment would have increased to almost $21,000 in 10 years. And it hasn't done great over the past year, but it's still doubled the investment over the last 10 years. If you total all 3 stocks up and their $10,000 investment in each, over 10 years, that $30,000 investment would have grown into roughly $87,000. That's a total return of 190% over that time period. And as you can see in this graph, over the last 10 years, Cisco has outperformed the beloved S&P 500, while P&G pretty much had the same performance as the S&P 500. Chevron did lag behind the others, but still being up almost 100% over the last 10 years is still really good. I just can't emphasize enough the power of investing in good companies that also boast a solid dividend, and then making sure to reinvest those dividends. Investing in stocks like these and in index funds like BOO or SPY that mirror the S&P 500 will put you on the right path from an investing perspective. Well, that's it for this video. I hope what we covered today gave you the information you need to start investing in any or all of these very solid companies that boast great returns and have a nice dividend that continues to grow. As always, thanks for watching and hanging around till the end. Don't forget to like the video and subscribe so you know when I put out new content focused on your money and how to manage it best with a little bit of comedy thrown there for good measure. See you next time.